Felix here. SoFi earnings are out on Monday, and we've got the highest short position I've ever seen on SoFi. So you might be thinking, does that mean we get a short squeeze? Hold that thought. So why the title? Because last earnings, we went down 21%. This is a stock that moves 10, 20, even 29% last August on earnings. So you're going to want to be careful with it. Depending on what your strategy is and what your position is, how long or short your time frame is, you're going to want to potentially close those trades. And we will look at how we can make money with a low risk, high reward setup for Monday. We look at two different trades here. We look at the expected move. We look at where the resistance and the support line sits for SoFi. So let me switch on my chart. Before we do that, if you want to learn more about our trade ideas and deep dives on serious subjects that actually move the market, you want to understand it on a deeper level, then go to felixfranzerrock/sub and sign up at felixfranzerrock/sub, like the sandwich. Of course, none of the following is financial advice, just an old banker sharing his thoughts with you here. So I've got on this screen here, short squeezes. So it says at the moment, short volume ratio is 124%. That's of course nonsense. That's because the trading day only just started. 31% is the average. It was something like 33, 39% at the end of yesterday. So when we've had squeezes up, like this one here, we had a 20% short volume. On the previous one, this one here, it was 30%. The previous one before that, it was 30% essentially. So but those were both down. So the shorts actually won on those two occasions. And that's the other thing, of course, to bear in mind in terms of risk. This one down was also, or was it up? It was up 20%. This one up here was at 17, 18%. So we had a pretty extreme position level going into earnings. And that means that if earnings are better than expected, you'd expect a blowout. If earnings are worse than expected, well, it's got to be bad. In summary, scientifically speaking. So how could we trade this? How can we make money out of this? All right, so we go to optionswatch.io. You type SoFi in here, and you then open the SoFi stock chart that we've just seen. You can zoom in and out. You can put in moving average lines, which is what I tend to do. And then on the right, you've got the options market. And I'm going to just move myself into the bottom left corner where I'm blocking less things. And what you then have in blue here, and this is in fairness a premium feature. I think there is a free trial. You can check it out. We have an expected move between these in this blue range. So by next Friday, the stock market is expecting SoFi to be between $10.20 and $8. So 10% up or 10% down, thereabouts, is the expectation. So bearing in mind the outliers and bearing in mind the short positions and bearing in mind that I'm more bullishly positioned on SoFi this time around than usual, the sort of thing that I might want to do is this kind of a setup. It's a little bit more complex and it's not a recommendation. It's just, I want to run you through it, like what the structure looks like. It has just give you an idea. It has 100% possible return, with a 71% chance of making money. And what we do essentially, we sell two puts at 950. We buy a put at 10 and we buy a put at 750. So it's two here and one on each of those. And that gives us a profit chart that looks a bit funky like this, where if we stay around flat, around about, well, up like 5%, we make like 100% profit. And the reason I say that is I think the market might actually be expecting a huge move like on Tesla, and we didn't get one. And we did put a trade on Tesla that made 2,000%, by the way. So that was a sweet setup. This one isn't quite as juicy, but it's a lot lower risk. This one, we look at how the juicy one looks in a second. That's more profitable potentially. So, but if it goes, up massively to 11, 12, 13, whatever, squeezes up, you're still making 49% profit all the way up. So it's a sort of setup that I do like, but you have to bear in mind that earnings trades are always more risky because it's event driven, and who knows what happens, who knows what is said, who knows what is asked. But this is the sort of thing that I would do, and essentially stock could go down from the current 9 in a bit to 851. So that little gray line here is your your break-even line, basically. That's where your break-even line would be. So that's one setup. Now, what did our Tesla trade look like? Basically, Tesla was expected to move a lot. We thought it wouldn't, and it didn't. So we made money. So again, blue area is the expected profit. We set up something called a long put butterfly, where again, you're selling basically at the current share price, two $9 puts. You buy a put at 10, you buy another put at 8, and they're there to lower your risk. So your risk is $19 now. It's capped. It can't get any worse. It's only $19, basically. But you want to understand assignment risk and everything else, of course. So if you want to practice these, get a paper trading account, Thinkorswim or Interactive Brokers, and play around with it. But this could have an 426% return. And that would happen if the stock basically doesn't move. Stock just stays where it is. Pops up and down a bit during the day, but finishes essentially where it is by the end of next week. You'd make 400%, 426% return. And that's essentially our Tesla setup. Now, you could make it a bit wider. You could go out a little bit, and that would increase your probability to say 75% now. So now if you're staying within 1020 and 777, which is a bit more sensible because it's the previous peak here, the previous low there, you're now making 160%. So 76% is your max loss, and you're making 161% gain maximum. Again, it's not financial advice. I'm not telling you to do it. I'm just explaining to you what the strategies are available so you can practice it in a paper trading account without losing your shirt, because you don't ever want to touch options unless you know what's your exit strategy, how do you adjust it, what are all the risks, what's theta, what's gamma, all those things. You want to truly understand how that works before you get into it. Now, let's go back to the stock chart here. And why? Because we want to see where the options market is actually positioned. What positions has everybody taken? And we can look that up. We can literally just go into a broker like Thinkorswim or Webull or whatever your drug dealer of choice is. And I'm actually typing in Webull, SoFi, and just type in SoFi. Click on the options chain, and then you see it. And you can literally look at August 4th, which is next week. And you can see where are all the call options. Well, the call options sit almost all at $10. Here, $10, 17,697. This is in the open int column, or the OI column. Sorry, I'm blocking that now, aren't I? Okay, let's do that again. So left side is calls, and then you look for the biggest number in the open interest, or the OI column. And that shows you a huge cluster of call options at $10. So that's where our resistance line sits, basically. So we go back in this chart and we have it in here. That's our resistance line. We make it red because it's hard to break through. And then we look at, okay, and where is the support? So look on the right side and find the biggest number of put options here, and that's at $8. $6.50 also a ton, but $8 basically is where it's at. So go back to the stock chart and actually move this down to $8. So the market is factoring in significant downside risk, 8 to 10. If you go back to our trade, this one here is above $10, so it's above the resistance, and at 777 our break even is below it. So it's maybe not such a crazy setup after all, right? And yes, you do only risk $76, so there's a thought. So that would basically be here in green, I'll make it, is our support line. So that's kind of the range the market's expecting. And that's a useful piece of information. It doesn't mean it's going to happen. Every indicator is only an indicator. It's as good as what you make of it. But it's certainly better knowing it than not knowing it. That's the way I look at it. So let me know what you're doing with it. If you're just sitting on it, you're sitting it out. If you're trading, maybe you're closing your positions before earnings. Like, what's your strategy? Which way do you go? And we trade pretty actively also around earnings. Like this month so far, we're up, 19% so far on the month, 47% on the year, which isn't too shabby. And if you want to learn more about that, we do actually teach it. We have a coaching program where me and a group of investment bankers, like genuine guys. We've got 2 market makers, people who worked in banks for 20 years, 50 years in hedge funds. And we actually teach you what Wall Street really does. If you have an interest in that, hop over to felixrenzer.org/coaching and just book a call with us and just ask us a gazillion questions and see if it's the right fit for you. I appreciate you watching and tuning in. Thank you very much. Fingers crossed for Monday. I wish you a beautiful weekend in the meantime. And go SoFi.